Welcome to this video on scalping futures. The hard part about making a video scalping is when you back test scalps, they're kind of, intraday, like they're happening live, and I do them every single day. So I'm going to make this video as like an overview of what scalping is, and then we'll have more in-depth videos after this. Another key note that I want to let you know is like the definition of scalping is pretty much, same day trades, which is all we do with futures, okay? But there's different scalps, right? And there's different things. What I consider a scalp is a smaller move that happens very quickly. I would say less than, 5 minutes is what I consider a scalp. The other moves that we do also are scalps technically, but this specific training is for very quick moves and quick profits. We're talking minutes, really, like very, very, very fast scalps. And I make a lot of money. I also highly recommend when you're just starting out, just focus on scalping. You can learn the larger moves later on, and those are better moves. Obviously, you make more money, but when you're just trying to get payouts, trying to get past prop firm challenges, scalping is going to be the way to go, especially if you're using Apex, because they have certain rules where you only can, make a certain amount of money per day. That's another story. But this is going to be an in-depth overview of these different scalping strategies. Again, whenever you're back testing scalping, it's everybody's a hero when you're back testing, but doing it in real time, identifying the patterns and practicing is what you need to do to really become a master scalper. But let's get into this. Scalping strategies for future traders, a tactical guide to high frequency, short-term trading techniques for capturing small price movements in the futures market. Let's go. What is scalping? Scalping is a trading strategy that aims to profit from small price changes with positions held for seconds to minutes. Scalpers execute more trades daily, aim for small profits per trade, rely on technical analysis, require strict discipline and risk management, need low latency execution and minimal slippage. Success depends on quick decision making, precise entries and exits, and the ability to handle high stress environments. Scalpers typically use 1 to 5 minute charts and technical indicators to identify short-term opportunities. I definitely do all my scalping on the 1 minute. So we're going to go over the first one. So the first one is a wick test. And again, everybody's a hero when they're back testing, but I want to show you. And the other thing is, like, when you're back testing, it just does the bar, right? It doesn't give you the movement of the bar, which is always kind of a pain. Okay, so here's a perfect example of a wick test, though, of what you're looking for. Let's slow it down real slow like. And again, this is literally 1 minute scalp, okay? And why it's called a wick test is because you see this wick right here that we've formed. It's usually on a big move and then a pullback. Okay, it's always on a big move, and it can be a big move to the upside or a big move to the downside. And the wick is going to hold, is going to be where we enter our trade. So you'll see this go up. So we had this huge candle, and then we had this reversal, and you can see that this wick literally hit this wick and then bounced. Really, we would want to enter right when we hit this wick, and then we would pop from this, and that would be our quick take profit. I don't think it's gonna like allow us to do the move like we would in a live market, but essentially what we're looking for is we have this big breakout. So you would be looking to enter at the bottom of this, like right where this wick is right here, where it hits this wick, and then it bounces back up, and then you would be getting out. It's literally that simple. And again, it happens more often than not. But it's a 3 candle move. So we have this is the wick we're looking to enter in on. Big move up, reverses. As soon as we hit this wick, we enter in for a buy. Boom, it pops back up, and we can get out for a nice fast profit. Okay, let's see if we can find one more. Again, much easier to do in the live markets. I mean, here's another one right here. So this is also a level of resistance right here that we end up breaking through, right? So this is the wick. We have this big punch up, moves up, and then we see that it retraces. Now, originally, I bet it worked out on this candle right here. Whenever we hit this little wick right here, because we had this big move, we never quite pulled back, and then right there you can see we pulled back right to this wick. We went bloop, and then as soon as we hit the wick, boom, we pop back out, and it just goes on for a ride from there. But again, these are very, very quick little moves. And that's just what a wick test is. This is a scalp. I'll try and find some more live wick tests that I do during my trading. But boom, right there, we came back down. We hit this wick, bounced up. We ride that thing up for a little bit of profit. Okay, beautiful. Now, wick tests are a little bit harder to show on the back testing, whereas order blocks are much easier. Okay, industrial buying and selling zones or large orders are filled, creating imbalances that price often returns to. Identify strong momentum candles, preceding reversals, enter when time price is on the move. Okay, so for good order blocks, I tend to find that the 5-minute is a little bit better. Go to the 5-minute, see if we can find a good example. I mean, here's a reverse order block. So you see how we have this big move down? Our order block is right here, essentially. This is our order block. And it is the body, not the wicks. The wicks tell the story, but the body is the meat. Okay? And the reason that this is an order block is we had this big move down, boom, boom, boom. But we went down and then we pulled back into this area and we had one green candle and then we had a continuation of downward momentum, right? So the first attempt that we had, we hit it here and we reversed. And the reason that this is so powerful is this is a area where orders are sitting, right? There's buyers sitting here and then they fail and they sell off. So the reason is when we return to a significant order block, there's a high probability that we will return from that order block, okay? Because we've already seen price fail to go higher at this level, meaning that next time we visit it, we'll probably have the same output because we know that at this level, sellers step in, okay? So essentially, again, what we're doing is we're looking for retracement to order blocks, and they have to be at least 3 similar candles, order block, and then you can lock in that area as a point of interest. We're going to play this out a little bit faster. Okay, so that's our order block. This green block in the sea of red, this is our order block. Now, obviously, we could hit it on this one. You see we almost tipped into it. That is not a full hit into the order block yet. Let's slow this down, though, a little bit. And again, this would be later in the day, but we can clearly see this order block is just sitting here, right? So once we finally do hit the order block, and we actually form another order block right there, boom, 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 and again, we're waiting for it to break this zone here. But we went all the way down, boom, look at that. We landed in the order block right here, and we're going to sell off. We'll probably put our stop loss at above that, and we'll go for a 1 to 2, how about? Boom, boom, boom. And again, we have this other field here of consolidation. And we could probably be happy with a 1 to 1, but whatever. Boom, hit our take profit. Okay, but you see how as soon as we came back into this order block, this zone right here, we immediately continued on the downside. And again, last time we were here, buyers tried to step in, sellers overcame them. Next time we came back to this zone, again, buyers tried to drive through, sellers came in. Okay, and this happens all the time. These are very common traits. And you can also do some of the ones that you'll see on the. I mean, here's a little baby one. So again, large green move up. Boom, boom, boom. Here's our order block, is this little red candle. Down, down, down. We finally come back into the order block right there. Right there. And then we sell off. And you can put your stop loss, probably right there. And you'll go for a 1 to 1 on this one. Flatten. Boom. Profit made. But you see how these zones, these order blocks, they tell a story in most cases. So like you see this right here, here's our order block. We don't hit it until the following session, and then as soon as we do hit it, we have this massive reversal, right? So this is how you play off the order blocks. Now you would have had to put your stop loss at the very top of the wick right here to be safe, and even then it might have hit that. Nope, it just barely didn't hit that, but that's kind of what you do with the order blocks. you want to bury it as high as you can, but there's a very high probability that when we return to these order blocks, again, the order block is this green one right here, because we have this big red candle, green, buyers tried to step in, rejected. So then we know next time that we hit there, if the buyers are trying to step in, sellers kick off right at that level. Boom. That's where we catch this massive move to the downside. That would have been a very good profit day, right? So again, 5-minute order blocks are ideal. You can do 1-minute order blocks, but they have to be like very solid for it to be considered a legit order block. I mean, here's a selling order block, but we never come back into it, right? So it doesn't really count. And you want at least 3 candles, or 2 big candles, and then an order block to really validate the location. And there has to be action happening, right? So this is a smaller order block. I mean, you see this one right here. This one is pretty clear. We hit this one and we bounce off of it. So as soon as you come back into this range, and you see we went lower on this one than this candle, okay? So that's why you want to bury your stop loss. Even like down here would have been fine. Here, we'll play this one out though, because there's actually 2 on this one, right? So this is the 5-minute chart too, so you'd be sitting around for a while. So here's our first order block. Boom, boom, boom. Like there's our second order block. So you might be thinking, oh, this one could be something, right? And you'd be right, but it's not the big move. The big move is this order block down here. So here's the first one. We come back in, right? We could buy here, put our stop loss down here. Let's see if we make a profit from this. Hits that order block, boom. Fairly quick little $500, flatten out. But then we wait. And you could have set your tech profit up here. Now we're talking. So now we've officially hit all the way to the bottom of this order block. Plus you see that we have the VWAP here. That's a very good probability of a reverse. So we put our stop loss. We'll bury it there. Big green candle out of it. $1,000. Happy day. Flatten. $1,500 even. And you can set your. I mean, this is a classic. Run for even high. Let's see if it goes above. No. Oh, it did. Look at that. So there's some manipulation that it breaks above previous highs, all from this order block plus VWAP. Very powerful setup. But you see how these are scalps, right? You see how you're kind of set your zone where this order block is sitting. As soon as we hit that zone, again, you might have gotten stopped out on this one, because if you just put your stop loss at the bottom, that's where the market makers are going to run for stops, because there's a lot of stops there. So you want to bury it even lower as far as you can, right? But that's an example of an order block. Let's go to the next one. And again, we'll have a more in-depth video on each of these, and I'll show you in real time how I do this. Support and resistance scalping, okay? Identify key levels. Find horizontal support resistance zones where price has repeatedly reversed. Look for previous day high and lows, round numbers psychological levels, multiple time frame influence, wait for confirmation, enter only after price shows respect for the levels, reject candle formation, volume spike at these levels, momentum indicator divergence, execute with precision, manage trade with discipline, tight stop loss beyond the levels, take profit at next resistance support, scale out at proportional targets. Okay, so you'll see me do this a lot. All right. So what I like to do is I have these certain indicators. Let's see if I have them on here. So this is the kill zones, right? So these ones are for Asia, London, and the New York session. Let's see if I have my other ones. I do have the other ones, but I have them on the 1 minute. So the key levels that you should really be looking for is always going to be the Asia low, and the Asia high, London low, London high, as well as the previous day high and low. Okay, so the previous day low is right here. It's this big red one. Previous day high is this big green one. But anyways, like my big levels are always the Asia low, Asia high, London low, London high, and then yesterday's high and low as well. But every morning when I step into the markets, I'm always drawing out these lines of, where was the resistance in the last session, okay? So every morning when I come to the markets, I pretty much do this horizontal line, and I do blam. And I mean, this one was very sideways in London, but we also had this one right here, and I draw those lines. And let's see. Okay, and then coming into the market, what happens is, let's just go to the New York Open and see what happens when it hits these lines. Boom. So the first thing we see, oh, this was a news day. So this news candle actually destroyed. But the first thing that we see is that this previous day's London low held super strong. And you can see it used to be a resistance over here. When we broke through here, it was another line of resistance during the pre-market session. And then we kept bouncing off it, but we could not go higher. We finally break below it. At the open, we try and break above it. News comes out, absolutely just plummets the markets down. Now you can see that the previous day's Asia low and London low are now the resistance levels, and we're going down. So then we'll want to enter in for a sell. We would put our stop loss, really at the top of this thing. Probably go for a 1-to-1 here. Boom, boom, boom. Absolutely plummets. And we're looking for the liquidity to take profit was right here, which was yesterday's low or something. Yeah, yesterday's low. So that would be our ideal scalp is, okay, we absolutely fall below to last night's London and Asian. This is the new resistance. And the next level of liquidity is all the way down here. We obviously already hit it, so boom, took profit, made a bunch of money. It's crazy how that works. These are my favorite scalps because they're big money. You just have to survive the BS, because like we could have, like, if this could have retraced all the way back up here and taken us out, but because we had so much failure to break through this level, from yesterday or whatever, from Asia's yesterday low, and these two big wicks, that tells me we're definitely going down. Plus we're under the VWAP. So then as soon as I see all these candles trying to break back above London high and Asia high, London low and Asia low, and we can't break above it, we're going to basically look for a short. As soon as we see the manipulation candle, which is this one right here, boom, 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 right, all the way down to our take profit, which was yesterday's low. Because if at this low over here, there's liquidity, because a lot of people jumped in the market here and rode this sucker all the way up, or stayed in, and their stop losses is right here, so there's just sitting contracts waiting to be filled for all this time, for a whole day, and then we're going to go down there and get those since we're bears now. All right, big deal. And then you see this other big manipulation candle. So then you could ride this manipulation candle back to the upside, but that's kind of a trade for suckers, and we would want to buy like right here, and our take profit would be the London high or London Asia low. Boom, we hit it. And then once we hit it, we're kind of looking for another sell-off here. I'm not sure if we're going to get it. Let's try it, because we now have upward momentum, and it is kind of the end of the session. Put our stop loss back there, see if we can go for round two. Not quite what we would want to see. We could take a little bit of profit here, flatten out. We're done. But let's see where it goes after that. Does it go all the way back down here again? It does. We could have just sat in there and been happy, but I didn't like it. Anyways, that is what you're looking for with support and resistance. Okay. So always look at these key time frames from the day before, mark them on your charts, and it's not a sure in, but it does tell you a story, right? This told me a story. We had this big bad news or whatever. It means we're going down. We tried to break back above this level, but this now became the resistance. We finally do break below. We're going to go down now and hunt for this liquidity right here. And liquidity just means there's contracts sitting there that need to be filled, that we're going to go get before we can go higher. Channel trading for scalpers. All right. So this is again, this one's a little better on the higher time frames, but this is the power of 3 essentially. So, and this is very, very powerful. Let's see if we can find a good example of this. All right, here's another masterclass in scalping. All right, so this is a higher time frame scalp though, so this isn't necessarily a scalp, but you scalp off of these clear triggers, right, of what we're looking for. So you are looking on the higher time frame. Again, typically what I'll do is I'll have my higher time frame up here, and then when I see that we break back into one of these zones, I'll be looking to enter on the 1 minute. Do what you do. This is typically for reversals though, or breakouts. All right. Okay. So let's break this down because this is a more complicated one. But essentially, these zones of consolidation become areas of resistance and reversals. Okay. So a prime example is we have this big expansion into this zone, and then it consolidates here, right? Eventually, it breaks down below. Back to this zone of consolidation, which is kind of interesting. Actually, if you go back, we have this huge zone of consolidation from the before times. So all I'm saying is when we have these zones of consolidation, okay, you see it right here. We consolidated right here. You see this? This is consolidation. A consolidation is basically not a clear move. It's where we kind of bounce around a little bit. We hit the top, we come down, we hit the bottom, we come down. This now becomes a zone of resistance for this next move. You can see we clearly break in to this previous zone, and then we bounce out of it. Okay, I hope that makes sense. So whenever we have these consolidation zones, they become areas of resistance for the next move. Okay, and the reason is when we were in this zone, lots of orders were just sitting, right? There's probably some stop losses above here that didn't get taken out. There's buyers that have been waiting in this zone or have been stuck in this zone that we need to go get those orders, and then we can continue higher. Okay, so essentially when you're scalping these, you're marking out these big zones of, like we just hit this one, of consolidation, and then when we come back to those zones, like we just hit this, so we probably have a good chance of breaking out. Now, it's not the end all be all. It's not a clean move necessarily, but what you're looking for is these retracements into these zones and then reversals. Okay, so if we come back to what happened here, so here's what happened at this exact zone, right? We want to mark out the zone right here. So we had all this consolidation right here, right? So we can clearly see this is a consolidation zone, this is a consolidation zone. So we're just going to be lazy though. We're going to mark them all. We're going to have this zone, because this zone already got hit. Yeah, so we're good. So as soon as we see this little break-in right here was a good time to hit. So both times we hit it twice, and I think we hit it a third time, but we go deeper into it the third, fourth time. So that, you see that big, huge candle right there, and then we hit the bottom, and then we basically, now we would be entering a trade, right? We put our stop loss, let's just do a 500 to, we'll do a 1 to 2 or something. Okay, so we saw this consolidation zone on the left here on the 4 hour, right? As soon as we tip back in, really this was the candle where we tip back in right here. This is our first little real deep dive, right? But the first time we hit the zone, immediate reversal. Second time we hit the zone, we did a double tap, basically. Bounced off. Now we're trying for the third time, and we're going to probably go a little bit further. Boom, boom, boom. Okay, now we're deep into this consolidation zone. We are deep in there. So again, we'll probably be looking for a long here. Put our stop loss way down here. Let's go for maybe a 1 to 2. Probably going to take a while to get that 2 on one contract. Let's see what happens. Immediate reversal. Boom, there's our little scalp. Probably can get out right there. So, and it would have hit my TP if I would have stayed in. But you see how we came back and we hit this 20-day moving average, then we hit the 50-day moving average, then we hit the 200-day moving average, and we actually stopped at this line right here, which I believe is yesterday's high. Yeah, yesterday's high. So those are the scalps that I really like a lot, but a lot goes into these, right? And these are fairly complicated. And you see how we went all the way down to the bottom? This is what the smart money is waiting for, okay? I mean, this was an easy pop, boom, a little bit of profit, a little bit of profit. We now think we're probably going to go higher. Nope, reversal all the way down. Now we've gotten every little stop loss, everything that we possibly can Now we can continue to the upside, see what happens, and now we can continue on our way up. Boom, with a big move at the end of the day. Pretty clean. I really like that a lot. So again, the way that you scalp these is, let's remove all my goddamn drawings, is whenever on the 4 hour or the 1 hour, whatever you want to look at, you see these zones of, or these squares even. Let's see if I can find the right tool for this. We'll just do these rectangles. Okay, so these rectangles are very powerful. And typically what you're looking for is a rectangle that gets hit 3 times and then moves on to the next zone, right? So we got a rectangle here, got a rectangle here. And these become your areas of liquidity. This is where we consolidated. Consolidation, expansion, remember? So expansion, consolidation, manipulation. This little green candle went a little bit higher. And if you look, this will probably be the same level as these previous zones of consolidation. So we have a very good sign that whenever we get to these points, you know, the market is going to consolidate at these key levels. Same thing here. But then once we finally break through where we hit right here, this was the resistance, but it now becomes the support. But if we break straight through it, that's a very good sign that we're also going to go lower, okay? So these are some very powerful scalping things. Again, this might be a little bit over your head, but the main key thing is whenever you see these obvious zones of consolidation, whenever we come back into this zone after a breakout, it is almost always going to be a level that we go higher or lower from. Here's a pretty obvious one too. Like you see this, boom, this is a level of consolidation on our ride higher earlier. So we had this big move to the upside, consolidation right here, big move up. When we come back into it, you see we have this huge red candle. All the buyers step back in. Money printer right there. Boom. And it's not every consolidation. It's really like these order block consolidations that are like the key zones that we should be looking for when we come back into them. Okay? So that's that. I'll have a better video on this where we go a little more in depth. Now we're going to talk about the orb technique. All right, the opening range breakout. Very powerful. Works pretty well. I enjoy it. You can do the 15-minute or the 30-minute or even the 5-minute range breakout. So let's go to the 15-minute. So essentially this is the opening range breakout. Okay, so we're on the 15-minute time frame. You put this little indicator, Orb 15 by Rhino Trades. It's free. You're basically looking for a fair value gap breakout of the opening range 15-minute candle. Okay, so there's the 15-minute candle. So essentially, you see it sets the tone. This is the first 15 minutes. And the reason that this works is because the first like 15 minutes of the day or first 30 minutes of the day is the most volatile with the most contracts. So it kind of tells you the frame of the day. Now, the only thing that you'll see is this first candle triggers the sell order, but on this day specifically, it basically cancels out right away. So you really want to wait for a fair value gap followed by a continuation in the same direction in order to enter for a trade. So we're going to wait. All right, there's our first entry, kind of a fair value gap followed by a continuation. All right, now we're going to enter in for a buy. And you're going to want to put your stop loss at the bottom of the range, okay? So we're going to go for a 1 to 2 here. This is a pretty big scalp. Or we're just going to go for, we'll try for a 1 to 2, but we'll be happy with a 1 to 1, okay? So we'll see what happens. Boom. Continuation. Probably be pretty happy with $1,000 here, right? So we'll put our stop loss $1,000. Let the sucker ride. This was kind of a slow grind up day. 3 candles down, a little more. We're going the distance. All right, and that is the end of our trading day, so we probably would have gotten out here for a nice little $2,300 with the opening range. Let's go to another day. So as you can see, we don't really get a trade this day until the end right here, where we could have gotten a small little pop. Again, this green line and this red line is the opening range notifications. We got this one right off the jump. Boom, kind of goes up, comes back down, and you see also the top of the orb becomes the resistance for the move. So that would have been a good chance. Again, you could have gotten here, put your stop loss at the bottom, let it ride. Here's another good example. Big breakout, up, then down. We finally get our fair value gap right about there, and we can enter for a sell off right there. So again, with this is a great thing for beginners, but there are a lot of days where it just doesn't quite work out. It looks like it worked out really well lately, which is fantastic. This is working out very well. So here's a day where it did not quite happen. But you can see we just didn't get a fair value gap until 9:45. Then we get a continuation, and as soon as we hit this low here where we hit earlier, bounce back in, we hit it again, back down. So the 15-minute opening orb, great strategy for beginners. If you just stick with this, it is very, very profitable. Usually going for a 1 to 2, 1 to 3, or even just happy with a 1 to 1. But the idea is you put your stop loss, you wait for the opening range, and then you wait for the breakout from the opening range, and you put your stop loss at the top. So you are taking a fairly large risk going for 1 to 1, but on average, if you have a good trending day, it's a very profitable. But like this day, we never got a trade, so we would not have taken a trade that day. Here we get a good trade up, so we could have taken that trade, but we never really get our fair value gap until about 9 o'clock, so you would have been waiting for this whole move. Very, very powerful strategy, but essentially you're just using this indicator and you're looking for a breakout outside of the opening range with a fair value gap, and it can be very, very profitable. And you're putting your stop loss at the bottom of the range, which has almost always turned into money. All right. Hope you got that one. We'll do one more example so you guys can see just kind of what it looks like. Here's a good one. So again, we're on the 15-minute candle. We have the orb by @Rhino Trades on. We're waiting for the first candle, which is our opening range. As soon as you see, you can set your settings to whatever you want. I have my high is green, my low is red, and we have these little arrows when it tells you to enter in for a trade. The arrows are decent, but we're really looking for a fair value gap out for a breakout. So this is a fair value gap. We still have opening, so we'll enter in for a trade here, a little bit cleaner. So our stop is all the way down here. So this is, again, fairly large risk, but has a very high follow through. So we'll put it all the way down here. We'll go for a 1 to 1. We'll see if we get it. We're essentially waiting for the opening range. You see these indicators, waiting for a fair value gap. Really, there's our first real fair value gap. Boom, straight to our take profit. Great trade. We'll do one more, and then we'll move on to the next one. So here's one where we kind of just get chopped around, and we don't have a trade this day. But you see, the red indicator told us we kind of had a fair value gap, but then immediately the next candle just smokes it. So you really want 2-candle confirmation or a very clear fair value gap. And if it does come back into the range, right? If it comes back into your range and it does not bounce off, you tend to maybe just take a loss or get out early. That's kind of what I've found. Here's another example where we just never really get a good trade until later on in the day, and it's all the way over here. Here's a little pop. These are all consolidation days. Really, the opening range is just great for trend days because it will immediately tell you to get in for a trend. But here's one popped up, had a fair value gap, and then it reversed, so that probably would have taken us for a loss. Another consolidation day. Here we get no fair value gap. Fair value, we had this really big manipulation candle, came back in the range, bounced off VWAP, could have maybe made some money that day. But you see, it's not 100% accurate, but on the days that it is, very, very profitable, right? Now, the thing with this day is as you can tell, Asia up, came back down, hit this. We have a very, very powerful candle going into the open. Usually we want to take those in, right? So then we get the fair value range, we get our first gap right there. We probably would have want to enter like at the beginning of this one, right? So we get our little indicator, have a little bit of fair value gap, second candle indication, let's buy right here. We'll put our stop loss at the bottom of the range. We'll go for a 1 to 1. If we don't get it, we're happy to. We'll try and stay profitable. Boom. Boom, 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 boom. And everybody's a hero when they back test, right? We get a nice little bounce off the, oh, we didn't even get high. We're just going to creep all the way up for the day. Kind of fading off comes back into our range. Never quite hit our take profit. We'll see if we can get one more bounce off of VWAP here. We do. But now the market's kind of over. But we could have gotten out at this high over here for a profit as well. But I hope you see this fair value gap, clear indicator. Up here, we kind of start to see a reversal. Probably want to get out of that. But that is the opening range breakout. Let's go to the next one. All right, this one we're going to talk about liquidity pops. All right, this is a little bit more risque than some of the other scalping techniques, but this either goes one of two ways, right? It's either a sharp candle down and then a continuation, or it's a sharp candle down and then the reversal. Typically, we are trying to either catch the breakout, and this is usually done on the 1 minute charts. So essentially, like if you look at here, you're either looking for continuations out of these consolidation zones or reversals, right? So this is considered a reversal. This is like a fake out, right? So we're stuck in this range for a long time. Asia, London, even the New York session. And finally, later in the New York session, we have this liquidity gap where we try and break out, and we basically instantly reverse. And when you see these breakouts, right, because we've tried to break above this, once, twice, and then finally on the third time, we finally get above it, and then we immediately reverse, right? So this would be a reverse liquidity break. And what would happen is we basically would look for this if this is a big red candle, and then we start to see it reverse, we would get in on the reversal and we would ride it all the way down to the previous low of this. And then you see when we finally hit the previous low, we have another reversal here which we could get in, but it continues to the downside. This one's a little bit harder to show in the replay but when it's live, when you see these big old candles, you can get in pretty quick for these little liquidity pops. Here's another range where you see we had we came into to come pretty hot. We hit this range right here, and we fake it. We go all the way back down to the bottom. We try and break down to the lower. Buyers step in, come back in. Sellers step in, buyers step in, and then finally we break out. Right, we finally break out of this range, and we have this big green fair value gap. That's in a liquidity pop to the upside that we want to get in and ride all the way up as much as we can. And then finally we get here and we have this big candle and a reversal. That would be our tell to get out. Okay, but whenever you see these consolidation zones, right, so we consolidated here for a long time, tried to break out, reversal, boom, liquidity pop to the downside. Consolidation zone here, right, we have this consolidation zone, had this big expansion up, consolidation hit it, reversal, tried to go lower, buyers stepped in. Finally, we break out of the zone after this tap right here, fair value gap, get in for a move to the upside. So that's what a liquidity pop is. Essentially, when you have these consolidation zones, and then we finally break out, and we have a fair value gap that breaks out. We'll see if we can see it on the 5 minute too. Usually, we're looking for these fair value gaps on the 5 minute of these breakouts, and then we enter in on the 1 minute. We're just basically looking for consolidation zones with a fair value gap breakout, right? So it is right here. Breakout, fair value gap, huge drop to the downside. Great move. Fake breakout as well. And you see the manipulation candle as well. So like this one tried to break out, reversal, we can get in for a scalp there. That's a reversal. Here's another good one. But this one's a little bit on the bigger side. So from this London breakout, fair value gap, kind of wiggle around. Then we have a reversal, break down to the downside. Blah, 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 fair value gap, enter for the downside. So you're basically looking for these consolidation zones, and they're looking for fair value gaps that actually break out or reverse from these consolidation zones. And that's what a liquidity pop is, essentially. All right, let's go to the next one. So key level scalping. You'll see me do this pretty much every single day. And this is essentially when I come to the charts. As you can see, we have this indicator. The indicator is ICT kill zones. But essentially, whenever I come to the market in the mornings, right, so let's replay today's. I'm looking at these different zones where The previous sessions have formed either support and resistance, right? So the Asia high, Asia low, London high, London low, right? And I think I already did this in this video. But essentially we're looking for whenever we hit these, so like we nailed this one and we actually just cooked right through it. So usually when you hit it and it bounces, that's going to be a point of reversal like we did earlier in the session. We hit it and we reversed, but when we just cook right through it, that's a real good sign that we're going to have a continuation, because when we go right through it smoothly, now this level of that was the support now becomes a new level of resistance, and it kind of tells us our bias for the day that we're going down. But we also had this bias because Asia went all the way up and then London just ripped it back and pulled down, which kind of tells us, okay, we're bearish on the day anyways. So then we see, okay, we tapped into it, huge red candle down. We'll see if we come back into it. And this is kind of what we would be looking for. We'd be looking for a tap into this area, followed, and then we would take a short, because again, this was the resistance for Asia low, London low. This was the resistance, or this was the support, but now it's the resistance for when we're trying to break higher. So let's see if we can get one more candle in. So on that candle in plus this red candle, we're gonna sell here, put our stop loss, probably like right there, and we're gonna go for like a 1-to-1. Boom, boom, and we win. Okay, so that's a very clean way to look at key level scalping. Okay, and again, like another way that we scalp is like just when we hit these zones, like the Asia high, when we came here in pre-market, we hit it and we bounced right off, right? So we're always looking at these zones. The other ones are going to be the yesterday's high, which is all the way up here, which we never hit, and yesterday's low, which is where we essentially would want to take, we would want to look to take profits at, because there's obvious liquidity there. There's contracts sitting there because of yesterday's low, right? So I hope that makes sense. That's kind of what we're looking for. Another one is the VWAP. We have a lot of setups that happen off the VWAP. The VWAP is just the volume weighted averages, but it's just as good as any of these zones. And the way that I use the VWAP is I'll use the iceberg, which will tell me if there's a lot of contracts being entered in. We use bookmaps plus iceberg, and we look for, whenever we get to the VWAP, if a lot of contracts start popping up, that is a definite sign that we're going to reverse. If we just go right through the VWAP, that's a good sign that we're going to continue to the upside with that. But these are how you use these different key levels for scalping and how it can essentially make you a better trader and you can make some money. The no wick candle strategy. Okay, so no wick candles. Let's see. So here's a no wick candle. So essentially, you see how whenever there's a no wick, it just means like there's kind of a wick on that one. But then when we get to this next candle, boom, no wick. So what we're gonna do is we're gonna put a little level right there. Well, here, let me remove these other ones because we're on to a different strategy. Put a level right at the no wick, and the next time we step into that, we're going to be looking for a reversal. So let's see if we get it soon. Doodaloo, doo doo doo. Okay, you see we tapped right into that no wick right there. We're going to enter for a sell. We're going to put our stop loss pretty much above on the next big candle. We'll go for a 1-to-1. And it didn't work. Boom. But you saw that. And also, like, this was kind of a no wick candle. But whenever you see these no wick candles, it's a good sign that there's a lot of action happening right there. And you can basically scalp off of those. So no wick candles on the 5-minute, on the 15-minute, those are super powerful candles. Here's another example of a no wick candle. And again, you can see that the no wick candles tend to happen whenever there's a big move and the orders are getting filled so fast that there's no retracement. So it just tells you that the market has to go back there to fill this liquidity. So we see this Nova candle we'll put there. We'll wait for it to get tapped. Oh, we might have missed it actually. Boom, we hit it right there. Enter in for a buy. Put our stop loss. Bottom of this. Go for a 1-to-1. I don't know if this is going to play out. Let's see. Boom, straight to take profit. Okay, so these no wick candles are like pretty easy, but you see, you want to bury your stop loss pretty low at the next level, because it's just kind of like random thing that I've kind of learned just from trading is that whenever those no wick candles get hit, there's more liquidity. So you're just looking for chances to use those as if they were kind of like an order block or if they were some sort of wick test, right? So you're just looking for a real quick trade off of these no wick candles. On the 5-minute, let's see, does this one work out? Yeah, see that one has a little bit of a dip, but then it kind of cooks right through it. And they're just real short bounces. They're not anything crazy. But they're just like, whenever you see those no wick candles, I would make a note and make a little line so that you can say, hey, if we bounce back into this no wick candle, there's a pretty good chance we're going to reverse. Again, all of this is probabilities. All right, let's see if there's what else we got. So we're just going to put it all together now, though. All right. You're not going to want to use all these scalps. They're just good to have in your mind. Really, you're going to want to pick just one, especially if you're just doing prop firms, and just trade one every day. Be looking for the same setup. But they're all just good to know because they all work, right? They all have a pretty good win rate. Probabilities of these trades working out is really well. You don't want to risk a lot on these trades. Again, I was going for mostly 1 to 2s, 1 to 1s, 1 to 3s. And that's kind of what you're looking for. And you don't want to be greedy when you're scalping. I make a ton of money just by entering in and having a good execution and then moving my stop loss into profit as soon as I possibly can. And then letting it ride and trying to get out at those 1 to 2, 1 to 3s. But again, I'm going to take money when you're scalping. It's very fast. Get in, get green, get out. That's what scalping is all about. So risk management, strategy selection. Pick one of the ones that I just went over. Practice it just for a whole week. Let me know your results. You should have at least a 70% win rate with these or more. Journal your trades. Know what you're looking at. Whenever you take a trade, pretend like I'm on your shoulder and I'm going to ask you, okay, which one of these strategies did you just use for this trade? It's going to make you a lot of success. Pre-session preparation, mark out those key levels on the charts, identify potential setups, and review the economic calendar before you trade. All right, that's everything for this scalping. Again, there's going to be more in-depth videos, but I hope you enjoyed this and I hope this was helpful. I'll talk to you in the next one.